Right. So next one, KKML and Associates were appointed as the auditor for 3132 of AMPL, a steel and iron manufacturing company, and NSE listed company for the first time. First time. So that's the initial audit engagement. CA Kush was the engagement partner for this assignment. Last year it was audited by Ananya and Company CA. Ananya and Company charged 7 lakh for the statutory audit. Over and above that, Ananya and Company raised bills for overtime and OPE of 1,50,000. AMPL Limited paid 7 lakh to Ananya and Company but raised a dispute over the calculation of overtime. As per AMPL Limited, the overtime on account of additional work as recalculated along with the OPE should be 95,000 and not 1,50,000. So it's a disputed statutory due. And the same was paid on a day before proposing the appointment of CA Kush as a statutory auditor. This OPE was accounted only to the extent of 80,000 on a provisional basis in the books of account for 3031. CA Kush, before accepting the appointment, communicated with Ananya and Company as to why he should not accept the appointment as an auditor of AMPL. Ananya and Company replied on the same day stating the reason for not accepting the appointment as there were the pending audit fees of 55,000 for financial year 3031, but they were disputed statutory due. An OPE is included in your statutory due payment. After analyzing the whole situation, CA Kush communicated with Ananya and Company that this was a case of disputed audit fee and he cannot decline acceptance of the appointment on this basis. Later, CA Kush accepted the appointment. Akash, the EQCR, insisted CA Kush analyze whether the opening balances reflect the application of the appropriate accounting policy. Yes, it's the one of the objective of 510. CA Kush contended that he is not required to verify as he is already testing for closing balances which contain opening balances, and that will give comfort over the application of accounting policy. During the year, Sham entered into an agreement with the company wherein the company will transfer a residential flat originally purchased by the company in his name to Sham for 4 crore, originally purchased at 2 crore and having a fair market value of 4 crore. Instead of consideration, the company will create a long-term loan due from Sham in the books of account at 3 crore and for the rest 1 crore will provide plant and machinery to the company, right? So it's a non-cash transaction entered into. Okay, right? Then no reporting on the further disclosures were made by the company for this transaction as this was done at the arm's length price. Based on the above, answer the question. Ananya and Company raised the contention that the appointment of Kush is inappropriate as there were outstanding audit fees of 55,000 and he should have not accepted the appointment as statutory auditor. Considering the above scenario, kindly guide Kush on whether he should have declined the appointment on the ground of the pending audit fee. As per Section 141 of the Companies Act, if another auditor other than the returning auditor is getting appointed as a statutory auditor in AGM, he should not accept the appointment till the time the previous auditor fees are paid in full. This is never told in Section 141. It's given under the ethics. As per Section 139, if another auditor other than the retiring auditor is getting appointed as an auditor, he should not accept the appointment till if the previous auditor's fees are outstanding for a period of 180 days or more. Some story they are making. CA Kush can accept the position as an auditor previously held by another CA or a certified auditor and the Ananya and Company who has issued a certificate under the restricted certificate rules 1932 without first communicating with him in writing. And CA Kush can accept the appointment as an auditor as the pending fees are disputed fees, and this would not constitute valid professional reasons on account of which an audit would not be accepted by the member to whom it is offered. Right? As the pending fees are the disputed fees, this would not constitute any valid professional reason. Right, so what does it say? If incoming auditor, one, you have to obtain the NOC, and second, incoming auditor, you need to check whether the undisputed audit fees of the previous auditor have been paid. However, this provision does not apply to a sick unit. But here it is not the undisputed, it is disputed, so it does not apply. Ananya and Company contends that they were not given a special notice and hence the appointment of Kush is invalid. Considering the above scenario, kindly guide CA Kush on what course of action he should have adopted in the current case. Clause 9, Clause 8, Section 144 and before getting appointed, communicate. Clause 9 of Part 1 of the first schedule provides that a member in practice shall be deemed to be guilty if he accepts appointment as an auditor without first ascertaining whether the provisions of 139, 140 have been complied. Hence, Kush is guilty of misconduct and his appointment is invalid. Clause 8 provides that a member in practice shall be deemed to be guilty if he accepts appointment without first ascertaining. Oh, that's not given in clause 8, that's given in clause 9. Clause 9, 139. So, clause 9, 139, and clause 8, it is regarding the NOC. Right? So, there is no 139. As per 144, the company is required to share the general resolution and the notice of appointment of another auditor once the resolution is passed. Hence, push appointment is valid and hence he is not required to perform anything further. No. Yes, CA push before getting appointed, communicate with the previous auditor, which was sufficient and equivalent to special notice. Oh my God, what crazy options. It's so simple, it is the correct option. Whether contention of Akash, the EQCR regarding analysis of opening balance is correct, kindly guide push with the correct course of action as per 510. Auditor will obtain the sufficient appropriate evidence whether the accounting policy is reflected in the opening balances, have they been consistently followed, and any change in accounting policy, has it been properly accounted for, adequately presented, disclosed as per AFRF. Auditor will obtain evidence whether the material accounting policies reflected in the closing balances have been consistently applied in the current year when there is a material change. If the auditor has identified misstatement in the drafting of accounting policy, then he will obtain evidence regarding the opening balances. When accounting policy is in the opening balance, auditor is not required to obtain evidence about the accounting policy, nothing doing, and auditor shall obtain. SAAE, whether the accounting policy is reflected in the opening balances, have they been consistently applied, any change in accounting policy, retrospective effect quantified and disclosed. Okay. Kush was perplexed concerning the reporting of transaction entered into between Sham and the company for the transfer of the immovable property. You being the AQCR, kindly guide Kush concerning the appropriate reporting as per CARO 2020. Right, so as per clause 15, as per clause 14, as per clause 9, and again as per clause 9 or 1. Right, so whether the company has entered into a non-cash transaction, whether the company under clause 14 is regarding internal audit, it is not regarding the non-cash transaction. Clause 9, which is regarding the repayment of loans and borrowings, right? So again, not clause 9. And again, clause 9, whether the company is required to report whether it has revalued its PPE, no relevance over here. So whether the company has entered into the non-cash transactions with the directors or the persons connected with him, and if so, whether the provisions of 192 have been complied with. Okay, right, so that completes our integrated case study number 11.